Hello and welcome once again to Policy Bazaar. I'm Arjun Bhagat. Now, everybody believes that nothing can happen to them, but there's always that element of concern or risk which prevails. There's also that question, what if something happens to me? Who will look after my family? Well, term insurance is a pure risk cover plan because it helps your loved ones overcome any financial trauma which may arise due to the death of the main bread earner. So how does one go about picking the perfect term insurance plan for them? To help us know more about term insurance plans, we have Yashish Dahiya with us, co-founder and CEO of PolicyBazaar. Welcome to the show, Yashish. Now tell me, explain what term insurance is and how is it different from the other insurance plans. And in the last few years, we've actually seen a lot of interest in it. People are buying it. So there has been this paradigm shift between how we looked at insurance earlier in India and how we are looking at it now.
Absolutely. So over the last 3 to 4 years, term insurance probably seen a 1,000-fold growth, but it's still very small. It's still about 1% to 2% of the total insurance industry. See, term insurance is a very black and white product. In case an individual expires, the nominee gets a certain sum of money. That sum of money is usually quite large, and the amount paid as a premium is usually quite small. Typically, one would get a 10 lakh rupee cover for about 1,000 rupees, or a 1 crore cover for about 10,000 rupees. Now, a very quick calculation tells you, you typically get about 10,000 times your monthly premium as cover. That's a very small amount to pay and get that cover. Now, this payout can happen in many formats. It can happen in one go. It can happen over time. There are some people who are very concerned about the fact that this premium will never come back to them. For them, there are certain products which return back whatever they are investing also. One way of looking at those is you are essentially getting the term cover from the interest that you are paying. Now, this term insurance that we are talking about is actually a compulsory component of all the life insurance products so far. Besides a few pension products, it is a compulsory component of most of the life insurance products that you buy. However, the cover people have been buying is extremely small. You're typically buying about 5x, 5 times to 10 times your annual premium is your life insurance in most of the policies. So till 3 years ago, the average...
And most of these were money-back kind of policies. Right?
Most of these plans are designed from a money-back perspective or from getting a certain fund. They have their own place, but they are not necessarily bought for the purpose of life cover, which is the primary purpose of life insurance. So that is what a term insurance, very black and white product. There's not too much gray about it because a person can either be alive or dead. In case the person is dead, then they get this amount, as long as they've not made any misdeclaration. So it's a very straightforward, simple product. There's not too much complexity around it.
So within term insurance, I mean, what are the options that consumers or people who want to buy it have?
Yeah.
Because there are term covers where you actually get some of the money back, or you get the entire principal back after a certain point of time.
Yeah. Now, the concept of the term insurance is clear. There are multiple ways in which you can get paid and multiple ways in which you can pay. The most common is you pay on a regular basis every year for the entire duration of the term plan, at the end of which, if you survive, very good, you celebrate that, but you get nothing back. The fact that you've lived that tenure implies the risk is over, right? The second mechanism is a single pay plan. What you do is you pay one time a large amount of money, a larger amount of money, and you're covered for the next 35 years. In case something happens, that individual gets the funds back, right? The third mechanism is where one pays for a limited period of time. You pay for 3 years, 5 years, 7 years, but the term cover continues for the entire duration of the plan. Now we move on to the other side, on how one can get paid. So one could get paid in one go. If there was a payout, one could get paid in one go. One could get paid over a period of time. So there are level term plans. There are term plans which kind of pay over a period of time. And one could get the entire premium that they have paid also back, which is known as a term return on premium. This is the base construct. Now, what one may also have is one may say that, my liabilities will go up with time, and hence you have an increasing term cover. So every year it may go up by 5% every year. You may also have a
So
declining.
that's an option that you can ask the company for.
Not every company has it. Very few plans of this sort exist right now. You can also have a declining term cover. As people get older, their liabilities reduce. The liabilities reduce because essentially their earning abilities are going down with age, or the amount their economic value is going down with age. And that is the point when one may take a reducing term cover. One may also take a reducing term cover for something like a home loan repayment. So there are lots of options around it, but 90% of the life insurance that's being sold today, or the pure is what you call a regular pay plan, and where you get your monies back at the end of the period. And that is astutely one of the best ways to go about a term plan. The term return on premium is the second most popular plan, and that is for individuals who cannot bear the financial loss of that amount of money. So what they say is, hey, I don't care, I want my money back. In that case, they would get a certain amount back, maybe with some guaranteed returns also.
Right. So now, inherently, as far as term insurance plans are concerned, would you advise people to get into it earlier? Because there are certain advantages. The earlier you get in, the premium is much less.
Yes.
And as you grow older, the premium becomes higher. And also, the kind of, how would you recommend somebody plans for term cover? I mean,
Sure.
20 years, 15 years, 30 years, how does it work? And what
Sure.
are the outer limits?
So term insurance is meant to cover the economic value of an individual who has other individuals dependent on his or her income, right? So till you have any dependents, there is no point taking a term cover, because in case somebody expires, who would those funds go to? There is no dependent, so there is no point taking a term cover. The moment one has dependents, whether your parents are dependents or whether the children are dependents, anybody could be a dependent, but the moment there is somebody who's looking towards your income for their basic necessities, that is the point one takes a term cover. And one takes a term cover for the duration of the economic value. So suppose I am today 40 years old, I expect to work till I am 65, so I would take a 25-year term cover. If I was 25, by the same logic, I would take a 40-year term cover. So essentially, one should take a term cover till the age that one is going to retire. Unnecessarily extending this term cover to 75, to 80, if I'm not planning to work till I'm 75 or 80, does not make commercial sense. It's not sensible, because you are unnecessarily increasing your premiums, and there is no economic value at that point. So my expiry when I'm 75, if I'm not working, is not going to have a financial impact on anybody. So there's no point trying to ensure that. And that just unnecessarily increases the premium.
Now, is there, what are the do's and don'ts? And what should one be careful of while buying? And also, what is the process? A lot of people get a little scared. There might be a medical test. All those questions come to mind.
Yeah. So this is a product where the insurance company is taking on a huge liability with full awareness that they may have to pay out that claim in case of an expiry. So they have every right to test the risk they are taking on. And the risk they are taking on is the individual who's buying the term plan. So in most cases, especially when the term cover is high, based on age and based on the amount of term cover being taken, there may be a medical. Companies are making it very convenient by, in 80%, 90% of the cases, arranging for home medicals. So somebody would come and they would take. The do's in this are, do not make a false declaration. If one makes a false declaration, chances are your claim may not get paid. And specifically a significant false declaration. Any health matter, please declare it. It's better not to get the term cover than to take it by a fraudulent mean. Right? Once you've made that self-declaration, do not be worried about the claims repudiation of the company, etc., because the company cannot repudiate your claim if you've not made a false declaration. Of course, the only catch is one should not commit suicide in the first year. One should not commit suicide anyway, because that is the one piece that's not covered, but that's a very basic do. Now, death is not the only risk, financial risk. Disabilities, critical illnesses, and accidents. These are all three can be significant risks.
And I believe you mentioned that those can be add-ons.
These can be add-on covers to the main term plan. and ensure that one takes a plan where those add-ons are sufficiently there. Because what could happen from an economic value perspective is, just imagine if somebody who's working loses their eyesight. If they've lost their eyesight, it's very difficult for them to work unless they're in one of the, or they'll have to change their vocation seriously if they're in a vocation that requires eyesight.
But there is an economic impact.
There is an economic impact.
In most of the cases.
And in that economic impact, a term cover will not pay you anything.
Right.
Unless the individual has a disability cover also, or a personal accident cover also. Critical illnesses, similarly, can have a very significant impact. In fact, my view is that for disabilities, one should take a higher cover than the base term plan. So ensure these covers are there in your term plan. Now, there are, do not get excited by just one feature or the other. Look at the term plan primarily from these disability covers, critical illness, personal accident covers, which is the same as disability.
And what about the costing to that? Does it significantly enhance the amount of
premium? It does not significantly enhance the cost, and that is very important. One needs to understand that specifically between 25 to 45, there's a very high incidence of accidents, extremely high incidence of accidents, specifically male 25 to 45, which is a lot of the earning population. And that is where the personal accidents covers come in. A similar, it would be roughly about 15 to 20% cost enhancement, which is not a significant amount given that the plan itself is costing you, $1,000 a month or so. So it's well worth it.
Right. Yashish, we have to take a short break. We'll continue this discussion a bit after the break. We'll also take our viewers' questions. But you can write on Twitter at PolicyBazaar_in, or you can email us at ask@policybazaar.com. And we'll see you shortly after this break. Keep watching. Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Dahiya, and he, of course, is telling us about term insurance. Yashish, about online, the whole process of online buying, whether it's term insurance, is it easier to do that now? And what about the cost factor to that?
So as of today, in a bulk of the plans, you would be able to buy online for about half to one-third the price of the offline plan, sometimes from the same company. So if you went and bought a plan from one company, you could get an online plan and an offline plan, and the online plan would be about half the cost. So the online is far easier. Also from a convenience perspective, there's a huge amount of technology and platform effort that has gone in from the insurance companies and from aggregators like us in terms of making sure that the customer very quickly gets genuine information, genuine advice, and is able to make a transaction in a fairly straightforward manner. In my view, it takes about 15 to 20 minutes to make a complete transaction along with the information search, which may take an additional half an hour or so. And I do not believe that is feasible in any other mechanism. Even in the offline mechanism, it's not as feasible as it is in the online. So it's really convenient. Of course, if you have the medicals, you will have the medicals. If certain documents need to be submitted, they will need to be submitted. But that is something I'm sure people are quite mature when they're making such a big decision. The decision cannot be based on whether one can submit documents or not.
And the choices now are many. It's not just one or two insurance companies.
Oh, no, you've got about 13 companies, and you've got about 3-4 more entering the fray.
And those comparatives can be made on sites like yours.
Yeah, and over the next few months, you will see a lot of innovation coming into this product, because one of the biggest pieces which I've been sort of talking about for the last 2 years is instead of getting paid in one go, instead of my wife getting, let's say, 5 crore rupees on one day, I would much rather prefer my wife gets 3 lakh rupees every month for my working age. And those kind of products.
And that's tax-free.
And that's tax-free. Absolutely, that's tax-free. And it just spreads out the livelihood for the family for a 15, 20-year period. These products are at the cusp of arriving now.
Thanks, Yashish. So a lot of exciting stuff in the insurance business, but we've got a caller with us. Rohit Sharma is calling from Noida. Rohit, go ahead with your question for Yashish.
Hi, Arjun. I had bought a LIC Health Protection Plus plan about a year back. I think it was a bad decision because I want to switch to now to standard health insurance plan from a general insurance. Since this is a health insurance plan from a life insurance, I believe it won't allow to be put to the policy. Also, the micro-linked plan, so that the quitting after a year is a wise choice. What do you suggest?
So what do you say to that, Yashish?
I think any health insurance plan that is mixing health insurance along with the investment component is usually not a very good idea. Most of the times these plans try to pay out of the investment that you've made, etc. So not a great idea. Plus you've got a problem in the sense you cannot port, if you wish to, you cannot port from one plan to the other. So I would suggest you need a health insurance plan, you need a proper health insurance plan. Take it from any of the GI companies. There are a few life insurance companies that are coming out with health insurance plans, but they've got the same issues, every 3-year renewal, lifelong renewal not guaranteed, portability issues. They cannot be ported. Suppose innovation in the health insurance happens like it's happened in the last 5 to 7 years, you won't be able to port into new plans. So I would say just go for any of the general insurance health insurance plans, and you have a wide selection there. You've got a lot of companies and a lot of products available. So depending on your age and profile, you can check out those products. I think you will end up with 3 or 4 out of which you will have to choose one. So do that research and go ahead and purchase one. And I would say, as far as this plan is concerned, very rarely do I advise this, but you can stop paying for it.
Right, we've got Mahi from Patiala. He's 43 years old and has an income of 17 lakhs, and he asks, how do I cover my home loan of 30 lakhs by a low-cost insurance plan, cover in case of loss of job or partial or permanent disability? Yashish.
Yeah, so loss of job can happen for 2 reasons. One is one gets removed for non-performance, or there's a disability and one loses a job. The second one can be very easily covered. So essentially, you could take a term plan with a disability rider. A 30 lakh term plan with a disability rider may cost you 3,000 to 5,000 rupees. There are lots of options out there. The good thing about taking a term plan rather than a home loan plan is, as your home loan keeps reducing over time, the term plan will continue. So there will be a time when your home loan would be like, let's say, 10 lakh rupees left, but you would have that 20 lakh rupees extra cover, which could go into the family in case of that unfortunate incidents. You could also take a pure personal accident cover of 30 lakh rupees if the only risk you're planning to cover is disability. But if you want to cover death and disability, then I would suggest a term plan with a personal accident or a disability rider.
Right, we've got Vinod Jhumpa from Kolkata. He's 28 and he says he has an income of 20,000 per month, and he wants to start a life insurance policy for his mother. What are the options that he has? Depending on his age and depending on how old his mother is, if his mother 70 is what he said. If his mother is 70, no. I said a while ago, you don't take life insurance cover for 70-year-olds. What you try, unless they are working, unless they're actively working, which I think is unlikely in this scenario. What you do try to do is take out a health cover for them, if you can afford that. Take a health cover for them, and for yourself, take a life cover, because she's dependent on you to some extent because of your income. So do take out a life cover for yourself. So see, life insurance is not a route to making money. It's a very important thing. It is meant to cover the unfortunate events which may unfold, which may impact you financially. And hence, you take a cover for the earning member, not for the non-earning member. We've got another caller with us. Go ahead, please, and also give your name.
Hi, I'm Anis. I'm 38 years old right now. I want to buy a term plan, and so far I've shortlisted my choices between LIC and MetLife. However, the premium I'm getting from LIC for a 25 lakh cover is around 15,000 per annum, and MetLife is offering the same cover at about half that price. I'm not sure why there's so much difference in the premium, so I spoke to the LIC agent and he said that, MetLife will have some issues on claim settlement, and that, I should not trust private insurers.
I guess the question is, why is there such a difference between, the LIC going through an agent and directly through online?
See, most of the offline plans, LIC is not alone in this, most of the offline plans have not been renewed in the last 3-4 years. It's the same question about health insurance. The new plans have mostly come out in the last 4 years. The term insurance plans, the online term insurance plans have come out in the last 4 years, 5 years. Before that, you had different tables or different costs, and the same costs are continuing offline. So it's not a cost of distribution issue, it's just that. And LIC is one of the ones which has not brought out an online plan yet, although they've spoken about it quite a bit. There's a lot of resistance from the agents because the agents earn their livelihood from this distribution and they don't want an online term plan. But you're the consumer, you've got to think about yourself, not about the agent. So for you, buying an online term plan is much better because it has a lower cost. Regarding this whole issue around claim settlement, beyond 2 years, which is when most of the fraudulent claims go out, every company has got above 90% claim settlement. And it is actually 100%. When the claim is genuine, there will be 100% claim settlement. So the claim settlement is not such a massive issue, I would say. And I do not believe any of the companies, including MetLife or Aviva or Aegon or Bharti AXA or HDFC or ICICI or LIC, have a terrible claim settlement ratio once you look at the genuine claims, specifically the ones which have lasted more than 2 years. So take a look at that. And there are lots of options. There are about 13, 14 companies out there. You could get a term insurance cover for clearly about between 4,000 to 5,000 rupees, not just 7,000 rupees. So paying 15,000 rupees for the same term insurance cover
just
doesn't make sense. But you know, if that's your comfort level, yeah, you have to go with your own comfort.
Right, thanks Yashish. Now that's all the time that we have on this show, but you can write on Twitter at PolicyBazaar_in, and also you can email us at ask@policybazaar.com, and we'll see you next time on Policy Bazaar. Goodbye.